and mitigation in trading markets. Order flow is another term used in place of transaction flow. Order flow occurs when we believe the price of a currency will move and then decides to execute an order in the market. Understanding the order flow of transactions is key to success in trading. How do we understand order flow? We must understand how price action moves within the market and on all time frames. By looking at the supply and demand areas on a chart, we can determine a highly probable scenario. If you have watched my previous videos, you would have a great understanding of how to identify where price action reacts from. We must be able to identify what is bullish order flow and what is bearish order flow. Then we take advantage of this. I'm going to give you one more bonus tip. How do you predict price action movements? Mitigation. Mitigation means price is filling an order block, breaker block, or imbalance. This means price action will gravitate to a certain key area before looking for a reaction in the market. You can follow the transfer of money to these mitigation levels. Now let's head over to TradingView so I can show you some live examples of order flow and price action mitigation.
I'm just going to quickly recap on order flow. Order flow is to understand price actions movement. Are we creating bullish order flow or bearish order flow? Are we creating higher highs, higher lows, lower highs, lower lows? One key factor is that high time frame structure is king. Lower time frame can create a lot of noise. This is where we have to train our brains to adapt to current market conditions. Onto mitigation, you'll hear me use this terminology a lot. Is this order block or is this wick getting mitigated? In smart money concepts, we use the 50% mitigation range a lot too. Price action loves to mitigate the 50% on order blocks, ranges, wicks, and imbalances. I will cover imbalances in my next video. Make sure you check it out. Once you learn how price action moves with mitigation and order flow, this can be a very powerful tool to use executing your trades. I do execute my trades in lower time frames. So let's head over to an example of order flow and mitigation. Okay, so at the moment we're on the daily chart and we've got lower high, lower low, lower high, lower low, lower high, lower low. If you haven't seen my trends video, go watch it to how to identify trends and market structure. So we're creating bearish order flow at the moment. Okay, what do we expect after a lower low? A lower high. Okay, and then if it creates a lower high, we have a 75% chance it's going to equal that low or create a new low. So let's just break it down and dissect the market even further. Let's draw on daily sell range. Okay, this is a price of interest because I know we have an order block here and a breaker block here. So I know price will have a reaction in the market. The market's not going to go straight down all the time, okay? It's going to go up, zigzag down. We've just got to follow the order flow. Now, can we buy in a sell range? Yes. I would not recommend it, only if you have confirmation on high time frame analysis or lower time with multiple confirmations. I'll show you how. So let's drop down to the 1 hour. Let's just move this. I'm just going to delete this, clean it up a bit. All right. So how can we buy in a sell range? We need to follow the order flow confirmation. Okay. What do we have here? We have imbalance and we have this order block up here. All right. So if we draw our range on, you got the 0 to 100%. Where's the best place for price to come to look for a sell? Up here in the premium. All right, so we've got premium. And then we have discount down the bottom here. We don't want to sell here. We want to sell up top here. Okay. So we're on the hour chart. Let's go to the 15-minute chart. we expect price to come up here and mitigate at least this imbalance and this order block, okay? We'll come to a high resistance area where we think price might have a reaction. So let's see if we can identify how we can get in the market to go long and follow the bullish order flow up into this key area, then to look for a short to go short, okay? Let's drop down to the 15-minute chart. Okay, so remember, we've got this box here, so we just need to concentrate on what's going on in this box, all right? Let's break it down to the 15. Let's scroll right in here, just to give you a little indication of what's going on here, okay? All right, so we have multiple breaks of structure. We've got this lower low here. It's got this little lower high inside bar here. So we've got a 15-minute change of trend. All right, or 15-minute boss. Either one, doesn't matter. We've got a second one. With this double breaks of structure, it's a high probability that we're gonna have a change of trend, okay? It works most of the time. Not all the time, but most of the time, all right? This is more risky. We can draw our order block on. We've got an order block here, all right? This is the 15. We can go lower to the 5. I'll probably come down and mitigate this wick down here, or go to the 50% area. But look, let's just follow the order flow, all right? Let's just see where the 1 hour boss is, 60 minutes. So you got your lower high, lower low, lower high. So the last lower high is up here, okay? Up here. So we need a break of structure here on the 1 hour to confirm 1 hour change of trend, okay? But at the moment, we've had two 15-minute bosses. Let's just see what price action does, okay? It's coming down, tapped into, without hit the 50% or mitigated 50% of this order block. We'll come up here, we'll mitigate this. And you can see how we're sort of creating high highs, high lows here. All right, we're going to come up here, got all this equal highs over here, liquidity building up. These will definitely get swiped. All right, so look at this. We'll go to 1 hour. All right, we've had a 1 hour boss. All right, what do we expect after a 1 hour boss? We expect to make a high, low. So let's just change this. All right, so we made the last high was here on the 1 hour. Then we created a high low down here. What happens after it creates a high? It's going to create a high low. And then we have a 75% chance it's going to equal that high or create a new high, okay? So let's see. Yep. So each candle is still moving up, high. Let's just follow it. High. It's coming up, mitigating this imbalance. We're getting into a premium now. However, we still changed trend. We haven't come into our key area up the top here where we think price will fill. So let's draw on our 1 hour order block. I'll delete this one, as we know. So clean this up a little bit. You 1 hour order block up here. Let's keep following this market. What do we expect market to make a new high low? All right, so we're starting to come down. This is where we can draw your range on again. From your high low, This is where you can use the 50%. So we had a change of trend. We've got this traffic level over here. I expect price to come down, at least mitigate this, to come up here to complete the short-term cycle of this bullish order flow. Okay, got a little bit of imbalance left up here to fill. We've got this main order block. We're going with the high time frame analysis that the price action will come up here, collect orders, and continue on the trend. Okay. Let's see what price action does. It's coming down. So there's two key areas. There's this key area here, the 50%, and you've got this key area down here. So if you're looking for trades, I would look for trades around the 50% because you've got this high traffic level around here, and or this order block down the bottom here, which is a nice discount range down the bottom here. You'd only look for orders around here, especially with confirmation on the lower time frames. So I actually took two trades up here. I took one trade down here, up to the top here, and another trade here, but I executed on the lower time frames with confirmation, okay? And I'll go into a deeper level with that in future videos. So let's follow the market. And as you can see, we're coming up to mitigate the imbalance and order block up top here. Beautiful. So I think this might have been the weekend. And all right, so what do we look for now? All right, we're coming up here. We're creating our daily lower high. All right, and what do we expect order flow to do? Equal this low, we'll create a new low. Okay. Let's see what price action does or gives us. So at the moment, we are moving along. We're creating a high, low here. So let's just move with the market. All right. I'll mark these on so you can identify it. High, low. So when you get into key areas, you need to mark it out as you go. I'm sort of speeding through because I'm making a tutorial. However, you mark it up as you go, and you need to mark on your lows and highs. All right, and you got to think where the last low is down here. So that's your break of structure. If it breaks here, we've had a change of trend. All right, let's keep clicking through. There we go. So have we broken this low? This low here, as you know, you have to read it. It's up here. Low is 18555. This one is 18559. So we haven't broken the low yet. Okay. So we're still there. This is creating some equal lows now. This is more likely to get swiped. So we'll click through. Oh, no, it still hasn't. Okay. There we go. So we've had a change of trend. 1 hour CO2. Let's clean this up. All right, so we had a change of trend. And what do we expect after price creates a lower low? We expect price to make a lower high. Is that right? So same thing again. Let's involve the market. Let's draw our 1 hour sell range on. We've hit our order block. We've mitigated the imbalance, the order block. We've had a change of trend. We'll go with the daily high, the high time frame daily bias of making lower lows, lower highs. We're expecting a lower low or equal this low. Okay. So let's have a look at this. Involve the market. Oops, sorry, I'll move this out of the way. So there's a low there. Made a new low, low. There's even more high probability that we're going to create a lower high now. We should have a pullback. Same thing again. This is where you can break it down even more. It's tapping into our order block, mitigating this area here. And what happens after we create a lower high? We could expect a lower low. All right. Price is mitigating it. It's ranging, going sideways. It's creeping back up. We're creating this liquidity here. We're creating liquidity. Likely it's going to get swiped and come back down. Still in this 1 hour sell range. All right. And here we go. Swipe that liquidity. We'll probably have a reaction at the bottom of this range. And here we go. And beautiful. Down to the bottom of this daily sell range. Okay. I would take profits along here. If I entered up here, I would definitely be taking profits down in these key areas. So we can follow it. And there we go. So we've just broken a low. We've created a new daily low. All right. But this is a basic understanding. We're following the bearish order flow, bullish, now bearish, okay? And we're using all these confluences of mitigation, of imbalances, wicks, order blocks to identify which way the market's going, all right? If we get these high probability areas, we can execute high probability trades, all right? So there, this is a brief overview of order flow and mitigation. A lot of noise is on the lower time frames and some order blocks won't get mitigated. This is why we need to stick to high probability trade areas when executing our trade. Thank you for watching. If you enjoyed this content, make sure you click that like and subscribe button and check out our links below. Have a great day. Thank you.